What's going on, guys? In today's video, I'm going to show you a trade I took on Euro GBP using the 4-hour and 15-minute strategy. Now with this trade, I did something a little bit different in terms of entry. I actually used the Fibonacci retracement tool to pinpoint my exact entry point and place my stop loss and take profit. It was a simple way for me to frame the trade, and I'm going to show you guys exactly how you can do the same thing. So without further ado, let's dive into the charts. I'll show you why I took the trade, how it played out, and I'm going to show you my execution for that trade as well. Alright, so of course this analysis begins on the 4-hour time frame as usual. Now within recent price action here, we saw price making huge bullish momentum to the upside. But of course that has to stop at some point, right? Price needs to begin retracing at some point. Even if the long-term goal is to continue bullish, we need to see some sort of a pullback. So that prompts me to look left and see what price could potentially react to. Now within this bearish leg back here, we can see that there was plenty of order blocks, plenty of imbalances that price had already invalidated. As you can see, it just pushed right through. But where did it stall out and start retracing? Right about here. And that actually lines up very nicely with this order block right here. But to be more precise, it's the imbalance just below it, right? Because we can see that price didn't really tap into that order block. So I'd be looking at the imbalance below it. Let's extend this out a little bit and just make this more precise to capture that imbalance. So as you can see, the initial imbalance was right there between those three candles. We tapped into it a little bit with this candle and then a little bit more with this candle here, but there's still a remaining gap there. So I'm going to refine that to right there. Let's drag that out. And you can see that lines up very nicely with where price actually tapped into. Now, let me just clarify something. It seems like I'm doing this in hindsight, but this was my thought process during the actual trade as well. When it comes to the 4-hour point of interest, you're not looking to trade off of that 4-hour point of interest. So if I were wrong about this zone, it wouldn't matter whatsoever. I would just look for the next thing that price could potentially react to, right? It just so happens there was a reaction to this area, and that is when you drop down to the 15-minute time frame and look for a potential entry opportunity. So let's do that. All right, so now we're on the 15-minute time frame and we can take a good look at what really happened here. So this is that 4-hour zone that we were just going over. Let's just rein it back a little bit and then label it 4H for 4-hour, just so we know what it is. That's the imbalance that we just looked at, right? So let's see what really happened here. This candle here is the first tap into that 4-hour imbalance. Now, shortly afterwards, price retraced and then pushed to the upside once more. But I'm going to identify this as the liquidity grab, which is a very important part of this strategy. And the reason I'm able to identify it as a liquidity grab is because instead of continuing to push through, we actually saw a change in structure to the downside. As you can see, we started retracing, consolidated for a little bit, but then made a big push to the downside, breaking structure to the left. So that's why this is classed as a liquidity grab. So in this case, we can confirm that the structure is in our favor. We're looking for a short trade and bearish structure has now formed. So this is where a lot of people get confused with this strategy, because you can start labeling these order blocks, or annotating them, should I say, and in most cases there's multiple to choose from, right? Here, for example, there's 2 to choose from. So this is where actually utilizing the Fibonacci retracement tool can be very beneficial for you all, because it simplifies the entry process and it takes out a lot of the guesswork. So although you may not have as accurate of an entry, you will have an easier time entering trades. So let me show you exactly what I mean by that. So instead of entering from one of these 2 order blocks, we're going to wait for price to start retracing, and then we can actually draw our Fibonacci tool from swing high to swing low, and we'll go over the next steps from there. But as of now, we can't actually draw the Fibonacci tool because we have our swing high here, but we don't yet have a solidified swing low. This could keep going like this, or it could start reversing from here. We don't know yet, right? So at this point in time, we need to be a little bit more patient and wait for price to actually bottom out and start reversing back to the upside. So let's play price forward and see when exactly that occurs so we can draw our Fibonacci tool. So right about here, it seems like price is retracing. Let's give it a bit more time. Okay, so we're still pushing to the upside. So it's clear to me now that price has bottomed out. This is a solidified swing low, and we're starting to push back to the upside. So now we can draw that Fibonacci retracement tool from this swing high down to this swing low. Make sure to use your magnet tool on TradingView so it snaps right to the wicks so you know that it's accurate. And then you can actually click on the settings We'll go over the numbers for the retracement tool in a second, but you can actually extend it outwards, and you just know that these are the most accurate swing points, right? So now that we've extended it outwards, we can cross-reference the Fibonacci retracement tool with our order blocks here, right? And so just for reference, the numbers that I'm using in my Fibonacci tool are the 71% and the 79% retracement numbers. These are deeply discounted or premium in a short opportunity. These are deeply premium levels to be trading from. So I like to line these up with an order block or an imbalance. And again, that takes the guesswork out of it, right? So you can see here that neither the 71 or the 79 line up nicely with this order block here. So this is a way that you can immediately disqualify not highly probable levels to trade from, right? But we can see that the 79% actually lines up very nicely with this order block up here, as well as that minor imbalance between those few candles right there. So that makes me favor this order block here. But instead of entering right from the order block, the Fibonacci tool makes it a lot easier to just frame out your trade, right? So in this case, I would set my limit order right at the 79% level. My stop loss would be right at the high for just about 10 pips. And the take profit would be right at the swing low way down here, which in this case was about 37 pips. So it's as simple as that, guys. So instead of trying to pinpoint the exact order block, if you're having trouble with that, then just use the Fibonacci retracement tool. The strategy remains the same. It's still the exact same concept, but a simplified entry approach. So try this out. Try using the 71 and the 79% levels. Figure out where that lines up nicely with to the left. If it lines up nicely with an order block or an imbalance, then that makes for a very highly probable trade if you got the initial directional bias correct. So let's play this forward and see how it went. I'll turn up the speed so we're not sitting here all day. As you can see, it was triggered in right there. And there was unfortunately a bit of drawdown in this case, but that's totally fine. So there was a bit of drawdown, but eventually price broke structure once more to the downside with tons of volume, tons of momentum, and pushed right into my final take profit. Now I'm going to show my exact execution. I'm going to put the MetaTrader screenshot right up on the screen here so that there's no questions about whether or not I took this trade. Not that that matters. You can see how it played out, but just for the sake of transparency, I'm going to throw that up on the screen as well. So this is a very simplified approach to the strategy that was taught. We've gone over multiple ways and multiple different scenarios to enter using this strategy, and this is just an even more simplified approach. So I hope you guys gained value from this. If you did, hit that like button. Make sure you're subscribed if you're not already, and reach out to me if you have any questions on Instagram or Twitter. All the links will be in the description below.